Okay, so we're recording now.
Okay, thank you, sir.
Yeah. So remember I said this is our one here, this is number one touch. We had this up. Now at the top, since we started having 2, 3, 4 touches down here, and we're going to still have so many. But remember, it's still going upward. We have an upward trajectory here. We're going to have this market force itself out to touch this top. There must be number 2 for the top. We have number 1, which is here, touching the top of our parallel channel. So we must have number 2. And for a long time, we've just been going. Remember, this is a daily candlestick. So each of the candles here are daily candles. They represent 24 hours movement in the market. Each of these candles you're seeing, all of them represent 24 hours of movement in the market. So for so many days, we have not been able to come up to retest this. Let me see these dates. This was the day we touched this was Wednesday on the 4th of December. Yeah. Since 4th of December, that is more than a month. We've been on this movement like this. But I expect us to break out of this channel very, very soon and then go up to retest this. So this is a very good buy for anybody who wants to make some money long term. Yeah, you can just buy and then sell at the top. So you put your sell order at the top, because definitely we must come up to touch that. Now the market can come up. The market can come up short term. It can come up and touch here, and we'll have a drawback. Why I said that is because if you look at where this is our point 1. If you put a horizontal line there, you'll find out that once market breaks out of this particular channel, where it has been respecting this channel for a long time. So once it breaks out of here, there must be a retest at this top. So price must respect that in the past, at this point, it's dropped downwards. So definitely at that point, we should expect a drawback. So we should expect a drawback at this point. So if we're able to break out of this channel now, we must come back down before going back up again. Let me just clear this place so that the noise not be too much. Okay. Yeah. So we use our Elliott wave again, and we break out of here. It's going to be a massive move that can get to this point. So at this point, we should expect the markets to come back down and then retest the same zone, come back down, and then break out of it. Yeah. And then come back down to retest that point where it broke out from. And then we can now see the markets move up further. So this is what I expect the markets to do. I'm not going to delete this. I'll leave it there so I can watch. Now, remember that in all of these upward and downward movements, we are having higher highs. This particular high, this one is going to be higher than this. This one is going to be higher than this. Then we may have some sideways movements because it is towards the end of a triangular channel. You have some consolidation before the market to break out. So if this market breaks out and then retests, this is a higher high to this. and a lower high. Now it is going to come, test the same zone again, because this is a strong psychological zone. It's a very strong psychological zone. So market must consolidate at that region before we finally break out. Then once we break out, we form a new high and a new low. So this our low will be higher than the previous low. So once you have higher lows, it means that the market is going up. But when you have lower lows, it means that the market is dropping downwards. For instance, at this point, this is a low. Here is a low. Let me make it clearer. This is a low here. Is a low. And that low was 0.01. And this is another low, 0.009. So once you start having lower lows, just know that the market is dropping downwards. But when you start having higher lows, for instance, this point, this is a low. The market drops here, this is a low. And then the second, there's another low here. And then there's another low here. So when you start seeing higher lows, it means that the market is going up. But lower lows means that the market is dropping downwards. I want us to remember this. Very, very important. They will have higher highs and higher lows. I'll explain that as well. So just for us not to forget, once we have higher lows, it means that the market is going upwards. But once you have lower lows, it means that the market is dropping downwards. And here, when the market started dropping, we had our channel, our first channel up, another channel down. So from here to here, we're able to draw our rectangle because I use this and this. Before your rectangle can be perfect, before your parallel line, sorry, can be perfect, it must have at a particular segment, it must have 2 or more touches to that same channel. For instance, this line here, this is one touch here. Let's see if I can use. This is one touch to the channel, one. This is another one. So at the top here, we have 1. And then we have 2. At this point, it broke out. Market broke out of that. But you must not wait for this side to be true before it can be true. Once the downside is correct, you have gotten 2 touches. This is the first one. Market went up and dropped back down and touched the same channel. So now we have 2 channels. So once your 2 has connected, you just drag it up to touch the one at the top, and your channel will be complete. Then the market will just start respecting that your channel, as if you have programmed it that it should not go beyond this and don't go less than this. So it will always do up, down on that your channel until there's a breakout. So at this point, we had this breakout. Now, I expected that there should be a breakout at this point. Why? Because I already have my parallel line running, the major parallel line running. So as the market came and touched this point and then went back up, I knew that since it didn't break out of here and stayed outside, that means it's going to give us a second touch, which will now give us a push to a breakout out of that channel, which is what happened. I actually traded this particular I had a buy here. My buy was waiting here for like 3 days, and then it took me into the market, and then I put my sell at the top here, because I know that once it touches here, it will certainly go back up to retest that zone at the top. So this is exactly what I'm waiting for to see in the bigger picture. It touched one here, there must be a second touch. So it gave us a second touch, still came back down before breaking out. Now, that is the same thing I hope to see here. Reduce this. So this is the same thing I hope to see at this point. Once we break out, I expect us to give a second touch at the top, which is, let's see how many percentage profit that will be. So that is about 82%. That's an 82% move. That's some good money, you know, 82%. So which means if we enter this trade at this point, 0.01, and we are trading with $100 only. Let me do this so we can understand what we're talking about. So we're trading with $100. So if we enter with $100 at this point, divided by 0.017, 773, we'll be having 5,640 coins. And then if we're selling at 0.03, so multiply by 0.03, 181. So we're making a profit of $179. $179. So in all, we'll be having profit of $79 because we entered the trade with $100. So the same way, you can imagine that you enter this trade with $1,000. That means you'll be having $790 as profits. $790 as profits. If you enter the trade with $10,000, you'll be having profit of $7,900 as profit. So this is how we make money in trading. Once you're able to see where the market is going, and then you enter. Now, some other persons may decide, like I've done this analysis, and I know that definitely this analysis is going to play out, considering that we are in a bull season right now. I can actually enter this trade at this point. At this same point, I can enter this trade here and decide to sell it at that top. So from here to that top is going to be giving me 181% profits. 181% profits. Now, what does that tell us? 181% profits. I mean, it's crazy, but it's achievable. The trade is there. You wake up one morning, one day like that, and you just see that this market has finally come up to touch here. Just as the market, at this point, those who read this market, who understand support and resistance, who enter this trade at this point, they enter the trade, and then when they saw this channel that it has started coming down, it has formed this channel, they sold. Even if you enter here and you sold somewhere here, I mean, you're still on profits. You're still on very good profits. So, but for someone like me, I try, you know, to trade in a way that I will not lose money. So I try my best to make sure that my channel is active before I can enter the trade. So my parallel channel, this channel is very much active, except something happens fundamentally that will make, you know, the market structure to break. But sincerely, right now, I am not seeing anything in the news that can actually make the market to drop. I'm not seeing anything. I told some of us some time ago that there will be a drop in the market. That drop has happened, but unfortunately, it did not go as low as we predicted. For instance, let's put our ruler from here to here. That is 52%, minus 52% loss, floating loss in the market. So if you bought at this point, that means your equity is minus 52%. I didn't say minus $52, so minus 52%, which means if you are trading with $100, your equity will be remaining around $48. But if you have held the market up to this point, just hold. The market is going to give you back your profit. It's going to give you back your money. Remember, it's a floating loss, but if you sell it, it becomes a permanent loss. So once this market comes back to touch this point, then you know that you are now back in the market. So the $100 you started trading with, or the $1,000 you started trading with, is back to $1,000. Because if you are trading with $1,000 and you bought at this top, please, one thing you should not do is don't buy market at the top. If you buy at the top, it will take you time to make profits. Because if that market is going to retest, like this one that retested up to this level, minus 52%, your $1,000 will be remaining $480. Like one of us that bought one coin with $20 called me on Sunday, say, So that coin dropped in value. Should I sell it? I said, why do you want to sell it? You invested $20. It has now dropped to 15. I want to sell it. It's not a wise decision to take. Allow the market, allow it to breathe. The market is going to come back up and it's going to give you back your money and potential profits. So you who entered at the top here, by the time we are reaching this top here, when we are making a let me use my ruler again. So when we who entered here will be making around 181%. Yeah. Now you are waiting for the market to get to this point. Remember, you're waiting for the market to come up. Second. So now you are waiting for the market to get to this point for you to now make around 50%, which is not bad. 50% of your equity. If it is $100 you're trading with, you'll be making $50. If you're trading with $1,000, you'll be making $500 because it's 50%. The move is 50% from here. That is for those who entered at the top. For those who entered at the bottom or who have not entered, who are just going to enter this trade today, you expect a 181% profit. It's going to happen very, very soon. So I think I've been able to refresh our minds. Now, our Fibonacci, I'm going to move that to tomorrow morning because I'm not going to drop anything for you to watch by tomorrow morning. You already have things to watch. So by tomorrow morning, we're going to go about the Fibonacci. So I've just refreshed our minds now and probably added one or two things. But if you have a question with what I have just explained, please ask so that we can know that we are done with the parallel channel. Any question, please? They say silence is consent. I don't have question because I understand. Remember, you are the one that will trade with your money. Any question? All right. So in the absence of any question, I will see us by tomorrow, God willing, by 10 a.m. so that we can look at Fibonacci retracement. Even on this, we should look at Fibonacci retracement to know where the market is going to go. Fibonacci helps us to know where our support and our resistance is. But if you understand...
Sorry, sir, I was called, so I missed some.
Yeah. Okay. I was just rounding off. So I was saying, if you have a question...
Oh.
So if you have a question on this, so we just refreshed our minds on what we have done and added some few things. But by tomorrow, we're going straight to Fibonacci retracement so that it will show where our support and resistance is. Me, I know where to get support and resistance, but you that are you're just starting, you need the Fibonacci retracement to be able to show you where support and resistance is. And if you can understand these things, trading will be easy for you.
Okay, sir.
Yeah.
Okay.
So God willing, we'll meet again by 10 tomorrow. Please do well to go through all those videos again so that by tomorrow it will not be new to us.
Okay. But are you going to send the recording to us?
Yes, I'll send it as soon as we finish.
Okay, sir.
All right.
Thank you.
You have a nice day.
You too, sir.
Nice day, sir.
Yeah. Thank you so much. Bye.